Hey guys, it's Kelly Wilson from the Wilson team. It's December 2021. Happy holidays. And I just wanted to do a very quick video on are interest rates expected to rise? So I know the headlines has been doom and gloom with interest rates are going to go up and interest rates are going on the rise, and expect a bit of urgency with a lot of people trying to run out and get pre-approvals and get into housing before the rates go up. But I wanted to share some information that might get you just to calm down a little bit and not be too freaked out that yes, the rates are going to go up, but how does that affect you guys? So definitely one thing that everybody's been paying attention to is inflation is the highest it has been in the last 30 years. So the cost of goods and services has gone up quite a bit, as we've all seen and experienced in the last year. So all of that points to a sign that interest rates do have to go up. Now, my personal opinion is that even though they're going to go up, Canada is in so much debt right now that to go up quickly would be completely catastrophic to the industry. You have to think of it as if Canada has a consumer debt of 5 times their income. So to be able to have to make payments on something that just skyrockets on borrowing is not really that realistic. They're going to have to do it very slowly. I know that the headlines were talking about 8 times by 2022 or 2023, but I truly don't see that happening because of the ripple effect that would have on the entire economy. So let's say we do have 4 increases and we even do half of what they say, which is the 8 times. So 4 increases would look like 1%. So a lot of people chose variable this year because interest rates were as low as 0.99%, which is crazy to think that you could borrow mortgage money at a percent. And anybody who was on variable last year got to take advantage of all of the decreases that happened during the pandemic last year. I know we're still in a pandemic, but we had to do an emergency interest rate drop last year. So a lot of people who are on variable took advantage of it. A lot of people broke their fixed contracts to take advantage of variable. And it's been riding pretty good for the last little while. Now, if it goes up 4 times, which is likely to happen, then you're really going from, I'm going to use an easy rate of 1.5% up to 2.5%. So if you're on variable and you go from 1.5 to 2.5%, then that is going to be a mortgage payment of a mortgage payment increase of about $231 per month. And if you remember last year, that's what you were paying. So you got to take advantage of the decrease, and then it went back up to basically where you started a year ago. So even though it's going to go back up, it's still so low that you're going to be relative to what we were looking at pre-COVID. Now, the other thing Canada does is they act as if you're paying 5.25%. So you have a stress test that you have to go through. So regardless if rates are 1%, 2%, 3%, we have to act as if you're paying 5.25%. So even though you might be paying a 1% mortgage rate or 1.5% mortgage rate with a $1,900 payment, we have to act as if you're paying 5.25%, which is $2,600 a month. So we've already got a really, really big buffer because you can't buy a house without the bank knowing that you can carry this at almost $2,700 a month, assuming over 25 years. So what you might see is the increase of 0.25, 0.25. They might stay stagnant for a little while. They might increase again, and it's basically trying to send a signal. And then you might see them even pull back a little bit, but it's all relative to what we've experienced pre-pandemic and pre-COVID. And I don't want you to freak out. I'm on variable. I'm not going off of variable. All of my real estate is sitting on variable if it can be. And I'm just going to ride it out because I'm still in one heck of a rate. And a lot of people and a lot of my clients are still on the variable rate, and they're not going to jump off because to jump over to a fixed rate, they're going to have to increase their own interest rate. Basically, they're going to go from 1 or 1.5 to 2.5. So why would you do that if you could just slowly wait and take advantage of all the principal pay down that you're doing right now? So to wrap it up, yes, I think rates are going to go up. I don't think they're going to go up as fast as everybody's indicating. The rates are still at historical lows, and keep it relative to what we were doing a year ago. It's not any reason to panic. I don't think they're going to go up as fast as they're telling everybody that they're going to. And it's important to sit down with a mortgage broker to go over all of the options that you have available to you. Is it worth jumping off fixed to go into the variable today? Is it worth locking it in? These are all questions we're going to answer in another video about variable and fixed. So stay tuned and happy holidays.